until now.
More than just business news, we're news for business people. Good morning. Welcome to BloombergQuint, India's first digital live streaming business news service. I'm Menaka Doshi.
I'm Pradeep Pandya. You're watching Indian Open.
Well, let's go straight to the headlines this morning. Sorry, I think I'm missing Ira and Neeraj this morning. Ira usually does the headlines, but let's tell you what the top stories are this morning. The dollar extended losses after minutes of the last Federal Reserve meeting show that there remains a strong degree of caution among officials over the timing of future interest rate increases. The IMF's fiscal stability report warns that rising debt and the search for yield by investors may be adding to the vulnerability of the global financial system. There's a very ominous 2020 warning there. It's a big boost for Sun Pharma. The US FDA gives an all-clear for the company's Dadra plant, its second largest facility, which caters to the US market. All eyes will be on TCS's digital business revenue when the country's largest IT outsourcer is out with its second quarter earnings later today. All right, those are the top stories. But first up, a quick look at how the markets are set up this morning.
Yeah, so if you look at what's happening at SGX Nifty, it kind of indicates a recovery, a mild recovery, at least in Nifty after yesterday's fall. Interestingly, if you look at it, most of the Asian markets are also trading higher after another record close at Wall Street, despite the Fed minutes kind of indicating a likely rate hike in December. But market has digested it more or less. The impact was more in the currency market probably than anywhere in the equity markets. Europe was the only segment in yesterday's trade, if you look at globally, which was slightly weak, and that is because the uncertainty with regard to Catalonia, it seems. If you look at commodity cues this morning, base metals have been trading weak, so that's a bit of a negative for markets. Vedanta ADR closed weak yesterday after the stock, and in fact all the commodity stocks were trading lower in yesterday's trade. So probably ADR is following, rather giving us a lead indicator there. A look at oil, and there it seems mild action. There is a mild decline. We'll have to see how oil stocks will actually react to this, but dollar index is something to watch out for. And the way dollar has softened, there could be some bounce expected in commodity later in the day, and also a relief for rupee that has been moving up. So rupee would be definitely something to watch out for today. Can we move back to 65 after a significant decline in dollar? That should support markets at least on any decline. If you look at fund flows, actually institutions were not very active in yesterday's trade. So probably the profit booking that came was more from HNIs and also from retail, the way we saw various key gainers of last week or last 10 days actually correcting. So there was more of a profit booking in yesterday's trade, and we'll have a look at it. Nifty intraday cracked, especially in the second half of the trading session. Nifty Bank was leading, and that is the pressure point. If you believe traders and analysts, they are looking at banking sector. And unless Nifty Bank recovers and gives a smart rally, they feel Nifty may tire off on any rise here on. So Nifty Bank is critical. Nifty Bank is something to watch out for, and we'll get the direction further from the banking sector only. India VIX also moved higher yesterday. That again is kind of indicating maybe a trend reversal. That is to downside actually. Mid-cap and small cap is what came under pressure yesterday, and also metal and realty. These were two indices or sectors that declined. And as I mentioned earlier, there were some high beta trader favorite stocks like HEG, Graphite, GEM Financials that were correcting yesterday. That indicated probably traders were selling off, reducing their position, looking at the decline. Stocks to watch out for in today's trade would definitely be Sun Pharma after that relief on Dadra plant, also Majesco, with the deal that they have got. TCS and IndusInd Bank, two all-important results to watch out for, not only for these two individual stocks, but also for the overall sector. The other stocks in the sector will also take guidance. And HCL Infosys is a small tech company which is planning rights issue. Is a high beta stock, traders' favorite. So we'll be watching for that as well.
All right, so that's the market setup, earnings really being the dominant word there, and the uncertainty at the Fed level on whether inflation will hit that 2% target or not, and what the key reasons are for keeping inflation low. Are they transitory or are they permanent? But that's a debate that's been going on for a long time. Today on First Word, we are going to focus on Sun Pharma. Now, the company can go ahead and seek US FDA approval for individual drugs that it makes at its Dadra plant, now that the drug maker's second largest plant has been cleared by the US regulator. So we'll talk a little bit more about the implications of that. Second quarter earnings season kicks off in full earnest today with two nifty companies reporting numbers. We've got IndusInd and TCS out with their earnings later today. We'll tell you what to expect from both those companies. Revenue Secretary Hasmukh Adhia was candid enough to tell BloombergQuint that the government is still looking into reasons for the sharp drop in GST return filings. That's the GSTR1 form. And then there was also that big story that played out on the IEX IPO. There was regulatory confusion that prompted the IPO to cancel allocation to a clutch of prominent portfolio investors whilst the IPO was open. So we'll try and tell you a little bit more about that very intriguing story. But let's get to Sun Pharma right away. A big booster shot for Sun Pharma. You want to tell us, Darshan, what to expect on this very quickly before we get in an analyst and expert point?
So this means that Diwali is coming early for Sun Pharma. It was much anticipated. Now, what does this EIR mean? And EIR means that, all is clear for your plant. So that is something that the US...
Which means you can manufacture drugs
they were already manufacturing this
for US
yes, and they were already selling it because they had a Form 483. The trouble is where when an import alert comes in, where you can't sell anything, or a warning letter wherein a little bit of your supplies are restricted. Here, the new approvals don't come in. So that was the issue. Okay. Now, what was this EIR all about? They had gotten a Form 483 EIR, Form 483 with 11 observations in April. Majority of them were procedural in nature. There was no data integrity issue. But now, since they have been given this EIR, it means that the pending new drugs that are in the pipeline, Sun Pharma will be able to get them if the US FDA approves it. How much does it contribute? It contributes almost $150 million, 6 to 7% of the US sale. So financially, this won't make an impact because they were already selling. But now the incremental revenue will come in if the US FDA approves.
But doesn't that depend on the pipeline of approvals?
Yes, they already. So from all plants, they have big drugs that are there. So what is happening is if they had already filed from that plant, the US FDA will not approve that drug because there are problems in that plant. So now the US FDA said this plant is over. So going ahead, all these drugs in the pipeline, Sun Pharma can get it again. And more importantly, sentimentally, this is a big positive because a lot of their plants are under US FDA.
Halol, most important.
Halol is the biggest plant that they have. So financially, this will not impact Sun Pharma much as sentimentally, because now the street is believing that Sun Pharma is getting its act right. Because they're getting it. See, that was the problem because it's been so many years since Halol is under problem. Now, I just want to point out which are the plants still under problem for Sun Pharma. We have a graphic for that. Halol has a warning letter and a pending 483. Karkhadi has an import alert. Ponta Sahib has an import alert, but this was a Ranbaxy plant. Devas was an import alert. They managed to clear two. One of them was the Mohali plant that Ranbaxy had, so they managed to clear it. And this is the big one, Dadra plant. Now, all eyes will be on Halol because Halol is a big contributor. Some of their key drugs are manufactured. Even Spark is getting impacted because Sun Pharma, they have a lot of products which Sun Pharma will manufacture. So Spark was also getting affected. So if Halol clears, then the entire re-rating will happen.
Okay, Darshan, hang on with us. We've got Amey Chalke, research analyst at HDFC Securities, joining us for an expert voice on what he expects will happen to the Sun Pharma stock today in reaction to this news. Amey, like Darshan's been explaining to us, it's great news, but more sentimentally than financially, what impact are you assessing?
So in terms of financials, we have not changed our estimates because because we were not expecting that it will hold back their approvals from the Adhia plant because of these observations. So, and the key approvals are expected to come only from the Halol plant, which can manufacture complex injectables, which are the lucrative product approvals basically. So I agree with Darshan that it is sentimentally positive. It's a positive step, but the Halol clearance remains the key trigger for the stock. And if it gets delayed further, then obviously it will impact their financials also, because the generic business will keep on facing pricing erosion going ahead, and that will take down the margins also.
Good morning, Ahmed. This is Darshan here. Firstly, how much does Dadra contribute? Our analysis is close to 6 to 7% of the US sales. And secondly, which are the pending approvals or big approvals that are there to be filed, that have been filed from Dadra that can get clearances?
So, key approvals are difficult to talk about, but the contribution is not much. It is not more than 7-8% on total US top line. So that means only 4% of total top line of the Sun Pharma. So the contribution is not much, and obviously the profitability of these products is also not very significant. So products which are sold from the Halol side are more lucrative in terms of margins. So obviously the profit contribution will also be much lesser compared to the top line contribution from the products which are sold from the Dadra.
Just my final question, Amay. Does this make way for the street now to believe that Sun Pharma is getting its act right? There could be more potential, a potential clearance of the Halol plant, or they will be able to get their act right there?
Yes, so it will help them to recoup their generic sales in the US market. But I believe Sun Pharma has achieved already kind of a 1.5 to 2 billion top line in the US. And for them to grow from here, generic will not help. It will only, the specialty product portfolio which they are developing will be the key growth driver basically from here on. So I agree that for generic side, they need these plants to be okayed from US FDA. But obviously to grow from here, I guess the specialty part of the business would be the important portfolio which they have to develop.
Okay, very quickly, Amay, what are you recommending on Sun Pharma to investors?
So our rating is neutral on the stock. We will wait for to get good visibility on Halol resolution, and we will also wait to get good outlook on the specialty business during the conference call. And I expect Sun Pharma CEO to give the guidance for this year, because I don't think so the top line guidance which they have given, which is a single digit top line decline, it is expected to, I expect it to be a double digit top line decline. So I believe some change or some adjustment in the guidance during the conference call.
Okay.
All right, Amay, thanks very much for joining us this morning. So while we do have something that looks sentimentally positive, Amay's prognosis for earnings doesn't seem to be very encouraging.
It doesn't change financially.
Yeah,
doesn't,
I know.
Sentimentally, it's a big booster. That's what we also
Fair
say.
enough, yeah, I know. And just the prognosis for earnings is important to watch for. Sun Pharma been under pressure financially for a while now, but the stock's been doing...
It's become 1/3 actually.
From the highs.
Yeah, from the highs.
All right, let's move on to other earnings. Thanks, Darshan. Yeah.
Well, it's the beginning of second quarter earnings season today with Tata Consultancy and IndusInd Bank will post results during today's session. Our research team has done all the number crunching. Agam Vakil and Shraddha Babla are standing by with more details. Agam, over to you. First up, how do you really see? Street seems to be pricing in a steady quarter for TCS actually.
Yes, we're not really expecting any fireworks for TCS, so it is going to be a green Diwali, so to speak. But let's start off with the expectations, starting out with the revenues. Around 3.5% growth in rupee terms, about 3% growth in terms of dollar revenues. So then this is supposed to be a traditionally strong quarter for the entire IT industry. That said, in terms of profitability, margins are expected to expand by as much as 110 basis points to around the mark of 24.5%. And of course, profitability is expected to move up by as much as nearly 6% quarter to quarter. What is behind the expectations? 2.5% volumes growth. The other factor that will be playing out will be the strength that we've seen in the insurance sector, which will counter the weakness in BFSI as well as the retail segment. Of course, there will also be your cross-currency tailwinds, which will aid margins. What are we watching out for? Now, given the fact that TCS and a lot of the other large IT companies are looking at that digital transformation, TCS in the last quarter had about 20% of their revenues coming in from the digital services. That is another factor that we'll be eyeing on, and how they're evolving and taking their positioning forward. The second, of course, important factor will be client spending, which has been so inconsistent over the previous few quarters. And finally, and perhaps the more important one, if you look at the way margins have panned out for TCS in the previous few quarters, the management has indicated a range of 26 to 28%. But if you notice, in the last 2 quarters, it's been well below that mark. Now, in terms of expectations, we're looking at around 24.5%. But, should they manage to post those margins about 26%, it will be a positive surprise, and the street will certainly take it as a big positive. But on the whole, we're not expecting a very great quarter for TCS.
All right, Agam, thanks very much for that. So that's TCS out this evening at about 5:30, right, if I recall? All right, let's take a look at what's going on in the banking sector. IndusInd will report earnings today. Shraddha standing by with what the bank is expected to report. Consistent as ever, Shraddha?
Absolutely. So the strong earnings growth trajectory is expected to continue for IndusInd Bank in this quarter as well. Let's look at some of the key estimates that the street is working with. Net interest income is expected to grow by 26%, 1,841 crores, while net profit is expected to grow at a similar rate of 25.6% to 885 crores. So that's the number that the street is working with. Now let's look at how some of the parameters are likely to look, starting off with asset quality. Of course, the trends are likely to remain steady like we have seen in the recent past, but it will be important to watch out for any lagged impact with respect to the microfinance exposure of the bank. Remember, in the June quarter, we did see the gross NPA numbers spiking up by about 13-14 basis points, and that was largely due to 2 accounts slipping into NPAs. That apart, when it comes to loan growth, it's expected to remain come in at a healthy 24%, of course, industry beating numbers. And net margin is expected to see a downtick of about 10 basis points to 3.9% on a sequential basis. What are the most important things that the street will be looking out for? Well, any comments on the Bharat Financial potential merger and updates on the swap ratio, because that's something that will probably drive the stock from here on, because earnings are expected to be steady. But mind you, the board has scheduled to meet on Saturday for a meeting on the strategic combination, so we may not hear anything today. Savings account traction and reduction in the savings rate is another thing that we are watching out for with respect to the management comments. And pickup in vehicle finance loans will also be important. CV forms about 25% of their loan book. The management did say that they're expecting some pickup September onwards, so that will be important to watch. And lastly, also watch out for asset quality with respect to the non-vehicle portfolio, especially in newer segments like credit cards and personal loans. But overall, a steady quarter expected.
All right, Shraddha, thanks very much for that. So we've given you some stock-specific news this morning. Stocks to watch: Sun Pharma, TCS, and IndusInd, of course, thanks to the earnings update. Let's now get to some macro news. The confusion around GST filings continues. Of about 65 lakh eligible taxpayers under the GST net, only 46 lakh entities filed the GSTR1 return for the month of July. That's an 8 lakh shortfall, or 8 lakh assessees less than the 54 lakh who filed the GSTR3B or summarized form. This raises further doubts regarding the preparedness of both the GST and systems as well as taxpayers, and more importantly, government revenue collection, because that's the number we've got our eye fixed on. Speaking to BloombergQuint late last evening, Revenue Secretary Hasmukh Adhia said that the government intends to take remedial measures to try and figure out why this shortfall occurred, but only after conducting a survey to analyze the reasons. Listen into what he had to say.
Taking immediate action against them is not desirable. We need to understand the reasons for non-filing. We are trying to do that. We will actually get into the reasons for non-filing. Now we will analyze this data, because for the month of July, so far something like 54 lakh returns have been filed with 3B. and GSTR1 have been about 45.99, so about 46 lakhs GSTR1 till yesterday. Now there is a gap of 8 lakhs there. So we'll try to see what is the reason for this gap of 8 lakhs. And then also there could be, the reason could be that some people do not have any transactions to report. Some people may be simply B2C and they may not worry about invoice matching, etc. So we'll have to see what are the reasons, and it could also be a misunderstanding among people that not everybody is supposed to file GSTR1. So if that is the case, after doing the survey, we will try to take corrective action. If it is information gap, then we will try to remove the information gap. These are initial months of GST, and it was expected that in the initial months, more revenue will come in IGST, because for every interstate transfer of goods, including by the same company to its own depot, IGST was required. So it was expected that there will be a greater flow of IGST in the beginning, but as you know, IGST is only a washout tax. After 2-3 months, the flow of IGST will decline, and the total amount received by government in cash will also decline. First 2 months is no indication, because we had expected it will be this thing. So we'll have to actually watch the revenue trend of SGST and CGST. That is the most important trend, and that we will have to keep watching for the next 6 months.
On bringing petrol and diesel under the new indirect tax regime, Adhia said the matter has not been discussed by the GST Council so far and will only be taken up if all states are on board. He also said that any further rate revisions will only be after detailed analysis of revenue collections instead of going through piecemeal changes.
I think both those comments were encouraging. The fact that he said that there will be no sudden rate changes. You know, we've already seen in June they did about 67 items rather, if I may call it that, because goods and services, but mostly goods, where they reduced rates. Then more recently, last week, we saw 27 items see rate revisions. And I think while industry is still adjusting to much of this, if you keep changing rates, it becomes really difficult. That's what every single expert has told us. So while everybody would appreciate lower rates, and what Mr. Adhia spoke to Nikunj about was saying, we look at the 28% category, because really that's the category that's hurting everybody, but not in haste. And I think that's what industry will approve. They want lower rates, but they don't want continuous frequent changes in
But
rates.
as of now, I think nobody knows what kind of revenue are they going to collect.
No, really impossible. I think the first 2 months, the numbers they came out with suggested that the average revenue collection was about 92,000 crores, but we still don't know about the refunds. We still don't know about many elements of the revenue collection. So I don't even know whether the 92,000 crore rupee figure is something that we can go by. So I think, like Mr. Adhia said, and like every single tax expert out there is saying, don't try to read these numbers for at least 6 months. And that's exactly what he told Nikunj as well. He said, don't try and read any revenue trend into this for the first 6 months, because there's so much adjustment that the entire system is making, both from the end of what the revenue department is looking at and from how taxpayers and assessees are, finally adjusting to the system. If you look at the numbers of filings, it's very disappointing, right, to see that not all those who were registered filed GSTR 3B. So anyways, there was a disappointment on that front. Yeah. Then of the, I think, 58 lakh that filed GSTR 3B, which is the summary form, only about 44 or 45 have actually filed GSTR 1. GSTR 2, the deadline, I think, will be in the next few days. So let's see how these numbers evolve, but not jump to any conclusions at this point in time.
Yeah, so difficult really for people to adapt to this new system.
I think partially it was expected in the fact that it's a fairly complex, several forms, filing and etc., etc. So much has been said about GST. But really, Pradeep, the story I wanted to draw your attention to was the IEX IPO that concluded yesterday, and yes, it got subscribed 2 times over and more. So all went well on that front. But the reason why this is an interesting story is because it tells you how some things function only in India, right? So what happened was that on the last day, well, in the middle of this IPO, the Indian Energy Exchange had to hurriedly cancel the allocation it had promised to a clutch of prominent foreign investors as anchor investors, and they had to cancel this because of some interpretation confusion on whether foreign investors can invest in this IPO or not. And let me tell you why. At the center of this is an FDI policy rule that says that foreign investors can invest in power exchanges, only just power exchanges, okay, through the secondary market only. Now, some people might say that an IPO is a primary market offering, right? That's how it's understood to be.
By definition.
Yeah. So I think late last evening, and this is the account we pieced together by talking to many people involved in the story. So it's all source-based because the company won't give anything on record, though they did say that this interpretation confusion did exist. But the story goes like this, that at some point while the anchor book was being finalized, one of the custodians raised an objection saying, can foreign investors really invest in this? Because look at the FDI policy rule. It says that they can only invest via the secondary market, and an IPO is a primary market offering. At which point the company and its bankers went and sought legal opinion and came back to say that, look, this is an OFS. It's existing investors actually selling their shares. So technically, in principle, it's a secondary market offering. We're not issuing new shares to the foreign investors. So there should be no problem whatsoever. But the custodian was not fully satisfied with this. And so therefore, this difference in interpretation could not be resolved. SEBI, all it said apparently was that, look at the guidelines and do what the law says or what the regulations require. So they could not resolve this, as a result of which, I think on Monday evening, they had to decide and tell their foreign investors who had all signed up for the anchor book, saying, sorry, here's your money back, and we're going to take those shares. They moved those shares to the QIB book for the IPO. And the second collateral problem that has come up now is that the SEBI FPI regulations say very clearly that an FPI can invest only through a registered broker when you're doing a secondary market transaction. Now, if this is a secondary market transaction, as IEX is claiming it is, then can an FPI investing in the issue invest without a broker in between? And in issues, you don't go through brokers. So that became the second question to answer. And it's quite curious because in all the issues so far, and the thousands that we've done, FPIs have invested directly in issues without there being any broker, and there's been no problem. But now that this question has come up, everybody's wondering and scratching their heads as to what happens here. Is there some new interpretation situation that's come up? So it's really not clear, but it's just a fascinating story of how sometimes things get done in India. So
that is because we have different rules only for exchanges, and then
no. So the FPI rule, the FPI rule has nothing to do with exchanges. The fact is that the FPI regulation, SEBI says that all FPIs investing in all secondary market transactions have to go through a registered broker.
Correct.
Since in this case, the IPO is being considered or being claimed by the company to be a secondary market transaction, an OFS, and not a primary market transaction. Therefore, the question mark came up as a supplementary question saying, okay, even if you were right, and even if this were a secondary market transaction, then don't we have to go through a broker, or don't foreign investors have to go through a broker? So that became the second confusion that occupied this. But the primary reason is the FDI policy rule. That's the reason why they finally had to change the anchor book and, tell foreign investors, sorry, you can't invest in this anymore. The one way to look at it, and the final word on this is, as I was talking to bankers, one of them pointed out that, but now, at least foreign investors, since they've been denied any participation in the IPO, will hopefully invest on the first day of listing. So they're hopeful that maybe, this will work out all well for them. But like we said, the issue closed. It was subscribed 2 times and more. And I'm sure all is well that ends well. But this is how business is sometimes done in India. All right, with that, we're going to wrap it up on First Word. But stay tuned. We've got a bunch of things coming up for you on Indian Open. We talk all things markets with Mahesh Patil of Aditya Birla Sun Life Mutual Fund. Is there a pickup in demand in the real estate sector? We put that question to Irfan Razak of Prestige Estates. And we discuss credit growth in the microfinance industry with HP Singh of Satin Credit Care. All of that's coming up on Indian Open in just a bit. But now, back to derivatives.
Yes. So let's go across to derivatives market now and figure out how they are likely to open. Agam Vakil is standing by with more details. Agam?
Well, Pradeep, we saw the Nifty move back below the mark of 10,000. In fact, this consolidation is still continuing around that level. Let's take a look at what's happening in the futures. In the October futures yesterday, we did see about a near 4% increase as far as open interest is concerned, but a much more substantial 15% increase when it comes to the Bank Nifty or futures. So there you have it. And this is while the Nifty, Bank Nifty moved down by as much as 1%. 2 key variables I always keep an eye on. First one is in the India Volatility Index. That has moved up by as much as nearly 5.5% to an inching towards the mark of 12, something the analysts have been watching out for. That said, when it comes to the Nifty put-call ratio, nothing much has changed. It has come off a little to around 1.35, which means that we did see a little more call writing yesterday. But that said, in terms of the way the options have changed in open interest. Because the fact we saw the Nifty come off, there was unwinding in the 9,900 and the 9,800 puts. However, more writing in the 10,000 and the 10,100 calls. In terms of stocks, we are watching out for JP Associates, which has moved out of the ban. However, there has been a lot of activity in the banking space yesterday. So we did see, some counters like Canara Bank, which did see a lot of fresh shorts building in. On the other hand, South Indian Bank continues to go from strength to strength. Another 10% increase in open interest towards fresh longs. So the banking space is something that I'll be watching out for, considering there has been so much activity. And of course, the index, whether or not it moves back above the market 10,000. But that's usual.
Thanks, Agam, for all the details. And Abhijit Pathak, Director at Defense Edge Solution, joins us now. Abhijit, good morning. What's your call on Nifty?
Nifty has pulled back to test the support near 9960 futures, which I was talking about yesterday. And if that is held, it can remain range bound between 9960 and 10,050. And I think it needs to consolidate here in this range for at least a couple of days before maybe a dash near the all-time high. But as long as 9960 is held, it is still strong.
Abhijit, dealers have been telling us that sell-off was more pronounced in Nifty Bank actually, and that is the sector to watch out for. What would be your call on Nifty Bank? Do you see strong support at lower levels in Nifty Bank as well, or no?
Yes, there is extremely strong support near 24,000, 24,050 on Bank Nifty futures. And typically, these kind of moves in Bank Nifty are expected towards the expiry every week. And I wouldn't be much afraid of Bank Nifty yet, as long as it is above 24,000.
Okay. To talk about some stocks, JP Associates, which is a high beta trader's favorite counter, moves out of ban today. Any call on this one? Abhijit, are you able to hear me? It looks like there's some problem. We'll try and get back to Abhijit. Let's look at some of the prominent cues from FNO segment. Nifty PCR has come down a bit, 4 basis points, so to say, from 1.39 to 1.35. On the other hand, we saw a sharp jump in India VIX. That kind of indicates, the risk moving up, or if you look at what's happening in the market, an option segment where straddle writing had become kind of a popular bet. Probably some positions were getting squared off there. Abhijit Pathak, I think, is back with us. Abhijit, are you able to hear me now?
Yeah.
Yeah, so I was talking about JP Associates. If you have a view there, the stock moves out of ban today.
JP Associates has a support near 17.5 futures. As long as that is held, it can go up. But then again, there is a resistance at 18 also. So I guess it might not, 18 or 19 is the resistance to watch out for, and 17.5 is the support to watch out for. Beyond this, it might move big.
Okay. Any other individual stock trade that you have spotted today?
What happened yesterday was not very good on a lot of stocks, so I would concentrate more on the index futures, Bank Nifty, and prefer to go long on Nifty near 9960 futures or Bank Nifty near 24,000, 24,050. But again, it won't be I don't think there will be a big rise. It will be only a sideways move, maybe again due to expiry today. So maybe something like 50-60 points on Nifty and maybe up to 24,200 on Bank Nifty. That's all I expect today. Not much activity.
Well, thanks, Abhijit, for taking time out for us. And now let's look at what are the cues from commodity market. If you look at WTI, 51.08 is down a bit from higher levels, but actually it's some profit taking from higher levels. I'll say above 51, WTI is still quoting strong. Gold was a significant commodity that moved in trade yesterday, more so because dollar softened after FOMC meeting. That was also interesting to note because FOMC actually sounded hawkish, and now there is a very high probability, 85% probability that we'll see a rate hike by FOMC in December. However, dollar was weak, probably because euro has been trading strong, so there were cross-currency moves actually. To talk about other commodities, ICE sugar ended a bit higher, so some positive for that sector, which has been moving up. So that's a strong indication for sugar stocks. Steel rose marginally, but aluminium was lower, zinc was lower. Copper was marginally higher. So net for base metal, it's very stock specific or commodity specific signal that we get. Commodity stocks had corrected yesterday, so it would be interesting to see if these stocks find some kind of support in today's trade. And this is definitely a sector to watch out for, other than banking, which has been really weak, and there was a severe sell-off at banking counters. G. Chokalingam is our guest who is joining us now. Mr. Chokalingam, good morning. What's your view on banking sector? I'll start with banking because dealers tell us that sell-off was more pronounced there. We saw more of a long unwinding or short build-up in banking, and they are actually watching banking index more closely compared to the benchmark Nifty or Sensex. What's your view?
Yeah, actually, if you look at the banking sector, there are three segments. One, we have public sector banks, and two, we have a large private sector banks like Yes Bank, IndusInd Bank. Then third category is where you have old private sector banks, basically which are regional focused and smaller in size. So according to me, the outlook is not uniform across all these three segments. PSU banks have been already beaten down a lot. So except one or two cases like, if you see one more bank becoming like IDBI or Oriental, unless such situation arises, you won't see a massive sell-off in the PSU banks. As far as the second category is concerned, the large private banks like Yes Bank, IndusInd Bank, we already seen a massive run-up. In fact, they have been the solid outperformer within the banking space. So that segment may come under little pressure because most of the stocks are trading at around 4 to 5 times price to book value. The third category, where you have the old private sector banks like South Indian Bank, they have not participated in the rally in a very big way. In the sense, even now, if you look at the price to book value, some of them are available at less than 2 times, whereas large private banks are available at 4 to 5 times. So my view is that the sector as a whole may not do very well, but certainly certain packets of the old private sector banks like South Indian Bank, and also few select PSU banks which managed to taper off the NPAs and also grow the business would do well in the next 6 months.
One stock that we are talking about today is Sun Pharma. At least clearance to one of the plants is likely to be a positive, but analysts are still not willing to kind of extrapolate it, to other plants. That if 1 or 2 plants get cleared, that doesn't mean all the other plants will also get cleared. But what really is your expectation? And looking at valuations, don't you see some significant upside from current levels?
I don't see significant upside from current level. Of course, this is a positive news. There could be some trading opportunity, some bounce could happen. But the fact is that, the US FDA has not toned down its aggressive practices in terms of quality control over the Indian companies. So that would continue in my view. And second, there is a tremendous pressure on the price realization, and not only in the US market, even in the domestic market. And apart from the pressure on the price realization, even the growth has taken a setback in the domestic market. We have seen the formulations are growing in single digit for many players within India. Even the export growth is down, for the period April to August by about 4% year-on-year basis. So there are a lot of pressure points, and my learning is that the pressure is going to remain there as far as realization is concerned. So therefore, I see maybe 5-10% upside, but beyond that, it is going to be a little tough for large pharma companies.
Okay, and specifically on Sun Pharma, do you see 5 to 10% upside here as well?
Yes, for the same reasons, and also fact that this is also beaten down a lot, one can definitely expect 5 to 10% upside in the short term.
Well, that's good news. But which are the other stocks in news? Which are the other big deals? And what are the FII brokers or big domestic brokers are really talking about today? Now we are joined by our research team. Good morning, all of you. Nikki, to begin with, Majesco has got a big deal in partnership with IBM.
Yeah, so the shares of Majesco, which is listed in US, ended as much as 4% higher after the 24% up move that they see intraday. This was after the IBM introduced the industry platform for insurers. Now, MetLife, IBM and Majesco have partnered on a data-driven insurance underwriting platform. This platform is expected to improve the process for new product development, along with underwriting and benefits delivery are also expected to be improved. What Phillip Capital has to say about this deal, it says that it's a multi-million opportunity. Now, back in October 2016, Majesco announced a 5-year partnership with IBM, and the partnership was jointly offered a cloud-based platform to help insurer carriers worldwide. With this deal, a revenue around $200 to $300 million is expected over a span of 5 years. The revenue share is in the proportion of 50-50, and the deal is expected to provide an incremental set of revenue growth for Majesco in the range of 8, 12 and 13% over the span of next 3 years. That's FY 18, 19 and 20. What Phillip Capital overall has to say about the company: it has initiated a coverage on this counter with a buy rating and a target upside of nearly 41%. It says that it has valued Majesco more so with the US business because the 98% of its revenue comes from the US business, and it says that still at this valuation, which is the holding company, which trades at a 50% discount to the US valuation, still is quite cheap as compared to its global IT product companies. Just to give you a little background of the company, it's focused on the insurance products industry for that matter.
So analysts believe there is more upside to this. But which are the other stocks, Shraddha, that traders should be watching out for today?
Maybe to start off with is the earnings season. So earnings, Network 18 Media and Investments has reported a decline of 13.7% in its Q2 numbers. They reported the numbers yesterday. EBITDA at the operational level, the company reported an EBITDA loss of 33 crores as compared to 71 crores in the comparable quarter, and a net loss of 71 crores versus a net loss of 90 crores in the previous quarter. So the net loss has narrowed, nevertheless a sizable number. You have NCC Limited, which will be in focus after NBCC said that they have given them an order of 1950 crores. So expect to see some positive reaction there. L&T, which is going to be selling its entire stake in EVAC Alloys for as much as 522 crores. This may not have a very big stock price reaction because L&T has said in the past and has been steadily divesting its non-core asset sales. Indiabulls Ventures has said that its 100% subsidiary has developed an app, a mobile app for instant personal loan disbursals to new consumers. Now, this is the best performing mid-cap stock over the last 1 year, so do keep an eye out for that name as well. And lastly, Bajaj Corp. We had a bulk deal yesterday where SEF India 5 FI Holdings bought 1% stake in the company ahead of its earnings. So let's see how Bajaj Corp reacts with respect to this bulk deal and ahead of its earnings, of course.
Well, Bajaj Corp indeed moved yesterday with excellent volumes. I think 10x volumes in average this counter we had seen. But moving on to pharma sector now, Lupin, Darshan.
Yeah, so basically yesterday they announced that they've acquired a company, a women's healthcare company in the US for $150 million. But after the market, they had this conference call. So we tried a lot to grill them in terms of telling us how they got this $150 million. So they tried everything and they dodged the question. So they were not ready to disclose how this $150 million valuation came out. The other factors that they said is the fact that they haven't even disclosed what kind of pricing they will do it. Street anticipates that per prescription it will be close to $150 to $200 million, which is much higher than the generics. Apart from it, Lupin has said that they're targeting anywhere between 15 to 20% of the overall 6 million prescriptions that is there for this drug. They say that the manufacturing will start and the commercialization will start in mid-2018, and they're saying that investment will last for 2 years. The potential payback will happen after 4 to 5 years. What a brokerage is saying, CLSA is saying that this drug could have a peak potential of $100 million and the payback will be less than 6 years. Citi is saying it's a step forward because they are moving significantly on the addressable market. Credit Suisse saying it's a good franchisee, but it will be good IRR but dilutive in FY 19 and 20 because of the upfront cost. And Goldman Sachs is also bullish. So all of them have given a good view as far as they believe that this is good acquisition right up their alley. But let's also listen in to what the management had to say on this entire deal yesterday.
The product is not launched as of yet, so I do not want to, we don't want to share any guidance on the revenue potential as of yet. But, I will say that the potential is significant given the fact that this is a very frequent condition that OBGYNs see in their offices. As I mentioned, it's 6 million prescriptions every year for bacterial vaginosis, and this being the first and only drug a single dose treatment for bacterial vaginosis, it has significant potential to take share in that market. Obviously, we're going to have to build share, which we have committed to do. We believe that based on the product potential, as well as our investments and upfront launch efforts over the next couple of years, we believe that it will it meets our 6-year payback criteria, which we have set for strategic acquisitions.
So, Pradeep, you just heard the management. They're saying that they expect the payback within 6 years, but they're not ready to give any kind of guidance for this drug.
So we'll have to wait and see how it really plays out. But what really, Jayesh, you are watching for today?
So, Pradeep, I'll be watching out for Indiabulls Real Estate because as per the exchange filing of last night, what they've done is they've made a proposal to acquire the balance units that they have in their Singapore investment trust. Now, the offer price for the acquisition is set at about Singapore dollars 90 cents on that one. The people who own the balance 45%, so the Falon Group owns about 42.7%, and the remaining is with public holders. Now, Falon has actually entered into an agreement in which they have agreed that they will tender in all of their units as per the offer. And Falon for that will get nearly 800 odd crores. That is, starting from 1 year to 2 year from the tender date. Now, what's the intention to delist and privatize? So the management has mentioned that they want more flexibility to manage and develop the existing investment. So that's the intention. And also this offer price of 90 cents Singapore dollars provides a premium of about 250% as per the last traded price, which was back in 2016. So that's a good opportunity for unit holders to get out. Pradeep, what I'm picking up after this is that this may be a precursor to get all their commercial assets under one arm, and post that we could see some kind of restructuring or demerger happening for Indiabulls Group, wherein a similar thing had happened for DLF. So if this is on similar lines, positive news for the stock and may react positively on it.
So value unlocking remains a theme.
Yes.
Well, thanks a lot. Thanks all of you for all these details. So we have so many stocks to watch out for. But Mr. Chokkalingam, if you have a view on IB Real or real estate in general, not many analysts have come out with very bullish calls, but the way these stocks have moved year to date, this is actually a leading sector.
I am also negative on the sector for a couple of reasons. First of all, if you look at GDP number for construction sector in Q1, it was very pathetic. And also a lot of numbers have come on housing sales. I firmly believe that the boom in the asset prices would deter the growth in the sector for quite some time. Yes, affordable segment is doing well, but that is a segment which is now getting crowded. Everybody is jumping in, and therefore they are going to kill the margin. And most of the real estate stocks are also not cheap. They are not in tandem with the economic reality. So if at all one wants to look at, one can look at Oberoi Realty or DLF if there is any small correction.
Okay, Oberoi Realty or DLF could be these stocks that one can think of investing in. Ruchit Jain, technical analyst, Angel Broking, is joining us now. Ruchit, good morning. First of all, what's your call on market? Do you think we'll see a strong recovery after yesterday's correction?
Yeah, hi, good morning. Yes, overall, if we see the broader movement of the markets, then since last 1.5 to 2 months, we have seen a broad consolidation phase in the range of 10,200 to 9,700. Now, if you see the positional trend, we have seen a good up move of about 9 months, right from the levels of around 7,700 to 10,200 without any meaningful correction. And post a 9 months of uptrend, now what we are witnessing last 1.5 to 2 months at that every rise around 10,000, 10,100 is getting sold into. And on declines, whenever market comes around the support of 97, 9800, some buying interest is again coming in. So this probably seems to be a time-wise correction after a relentless up move of about 9 months. So positionally, we are not expecting any trended move to come in the markets in near term. We would continue to trade in this broad range what we are seeing in last 1.5 to 2 months. Now, looking at very short-term charts. Now, yesterday's sell-off from the higher end is definitely a bit negative for the markets, because if we see yesterday's high around 10,070, it exactly coincides with the 78.6% retracement of the previous corrective move. So, in next 1 or 2 trading session, we believe that markets are likely to remain under pressure. In yesterday's session, even the market breadth in the later half was a bit negative. So on the higher side in today's trading session, around 10,020, 10,030 would be a very stiff resistance, and we are likely to see levels around 99.50, 99.40 either today or tomorrow.
But you're looking to short Nifty Bank?
Yes, Bank Nifty has been one of the underperformers in this consolidation phase. As I just said, this Nifty has already retraced 78.6% of its previous corrective move. But if you see the retracement in the Bank Nifty, then it is just above 50% retracement, which is a big underperformance. Now, if we see the private sector banks, which constitutes more than 70% of the weightage in the Bank Nifty index, names such as ICICI Bank, Axis Bank, they have already not been performing since last few weeks, in fact since last few months now. And those names which are leading the Bank Nifty higher, such as IndusInd Bank, HDFC Bank, these names too have been showing a bit of corrective move since last few days. So I believe that the upside on the Bank Nifty would be capped. Yesterday's high also coincides with the 200-day moving average on the hourly charts. So around 24,200, if we get a pullback move in today's trading session, that would be ideally good levels to go short just from a very short-term trading perspective. Keeping a stop loss about 24,480, which is 200 SMA on the hourly chart, and we are expecting targets around 23,800 in short term.
Okay, so that's the call on Nifty Bank. Bearish view actually that you are sharing with us. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, is also joining in. Chandan, you are focusing on oil and gas. Well, that has been the strongest sector of late. So you like IGL and also HPCL?
Yes, sir. We have seen buying interest in most of the oil and gas companies in last couple of trading sessions, and especially when market was falling down yesterday, the built up and the short covering was seen in most of these stocks. The sector outlook is positive, and these stocks are trading at the recent highs with fresh momentum. So expecting this rally to continue going forward. So that is the reason that I have positive on the selective companies. First is buy on IGL. This stock has seen short covering by 9 to 10%, managed to surpass immediate hurdle, managed to close above immediate falling supply trend line with rising volume. So expecting this rally to extend towards 1585 and recommending to buy with a stop loss of 1485. Apart from that, we are positive on the oil marketing company as well. And in that space, I am recommending to go long on Hindustan Petro. After the consolidation of 5 to 6 trading session, it managed to hold the support of 50-day exponential moving average and witnessed a strong recovery in buying interest in all three companies from the oil marketing. So recommending to buy on HPCL as well with a stop loss of 446 for an upside target towards 472.
Okay, so these are some of the calls on oil and gas sector. But on to Bloomberg Edge, our special segment on the show. Jayesh Khilnani is here with the technical indicator on Havells. Jayesh, what is really the signal?
There is a bearish signal on Havells India. Now, as per stochastic, there has been a bearish crossover. However, the sell signal has not come in yet, so we'll have to wait and watch when the sell signal comes in. But this is an early indication of a possible bearish setup. Now, let's have a look at how the stochastic actually behaves. Well, it shows you where the price movement is, kind of extended. So we've seen Havells India run up from about 490 levels to 540 levels in the last 1 week. So that's the overextended price move that we are referring to, and it measures where the current close is in relation to the recent high or the low. Now, while interpreting the indicator, a few conditions you have to bear in mind. So anything above 80 is overbought, and anything which is below 20 is oversold. Now, crossover between the two lines gives you the buy and the sell signal depending on the direction of the crossover. Looking back at the chart of Havells, the bottom panel shows you the stochastic indicator, wherein you can see this yellow circle that is there, and the blue line has in fact crossed below the white line, which is a bearish crossover. However, this is still not crossed below the red line on the screen. Once that happens, that is where the sell signal will come in for Havells India.
But what is really the accuracy rate of this indicator?
So Pradeep, first and foremost, just let me remind that, on 4th of October, we had done a similar stochastic indicator, but that was on the buy side on Havells. This is where the buy indication had come in, and post that we have seen that the stock has rallied as much as, 8-9%. Now, going back to the hit rate, well, in the last 1 year, if you had followed all the indications given by stochastic, the hit rate would be about 120%.
Well, thanks, Jayesh, for all these details. So this is a stock to watch out for based on our proprietary indicator, so to say. So Bloomberg terminal throws up such interesting stock ideas on a regular basis. Havells India is the one we are looking at today. Mr. Chokalingam, you have a fundamental view on this stock?
I completely agree with your technical analysis. I think it is extremely overpriced, trading at more than 50 PE. And if you look at the market cap to revenue, it's about 5 times. So I find it very difficult to digest. Fundamentally, I believe it should correct significantly.
Okay, so that's the call on Havells. Well, Chandan, coming back to you, you also have an interesting call on Sun Pharma. That is the stock in focus today.
So we are positive on this stock from last 2 to 3 weeks. However, it rallied and then took a pause, but longs are intact and the fresh writing is taking place at 520, 530 strike. It has surpassed a major supply trend line on the daily, weekly and the monthly chart, and that is the reason that I was expecting the movement of 8 to 10%. Already rallied by 3-4%, expecting further 5 to 6% movement in the counter. So recommending to be with the bull call spread by buying 540 call, sell 560 call. In the entire strategy, cost will be around 5 to 6 points, and we are expecting this stock to move towards 560, and in that scenario, the reward will be around 12 to 15 points.
Ruchit, Bharti Airtel is the stock you are looking to buy. The stock gained 4% in yesterday's trade. You see further upside here?
Yes, probably believe that the stock has seen its worst. If you see the recent past, then levels around 370 has acted as a very strong supports. And not only once, I think in last 3 months, it is the second or the third occasion wherein the stock has again showed a pullback rally from 370 levels. And also, if you see the volumes in yesterday's trading session, then definitely compared to its average, the volumes were higher. So this is a clear indication that the stock should again move up to 430, 440 kind of levels, which was the recent high. So we are not expecting any significant sell-off to come in the stock. Any minor declines also come that should be used as a buying opportunity in this. From a trading perspective, one can look to buy with stop loss below 382 for target around 440 in about 2 to 3 weeks of time frame.
However, you have a sell call on Ujjivan. You will short this one.
Yes, if we see Ujjivan Financial, then amongst the NBFCs which has recently shown a decent up move, this has been one of the underperformers. A low top, low bottom formation on the positional charts is there. And in the yesterday's up move, the super trend indicator, which is a trend following indicator, acted as a very stiff resistance. Also, the volumes were good in the sell-off, which is clear indication that this underperformance is likely to continue. Short-term traders can go short in October futures of Ujjivan, keeping stop loss above yesterday's high of 348 for probable target around 305.
Well, Chandan, you also have a call on HUL. You know, whenever Nifty is negotiating a strategic level like 10,000, ITC and HUL come in focus. What's your call on HUL really?
Yes, I think that is the only reason that we have selected this counter, and it witnessed a strong recovery from the lower levels, respecting to its rising support trend line, and also holding above its 50-day exponential moving average. And the stock looks attractive after the decline of last 2 to 3 weeks, and offering a better risk reward ratio at current level. So that's why I'm recommending to go long on HUL with a stop loss of 1194 and expecting it to move towards 1250, 1255 kind of levels.
Well, to talk about some more stocks, NCC is a mid-cap stock in focus today. NBCC has given roughly a 2,000 crore rupees order to this company. Mr. Chokalingam, do you have a view on NCC?
One can definitely hold it and also can buy based on this news unless the stock spurts more than 5-10%. Reasonably a good play within the construction segment. So if it doesn't spurt substantially, definitely one can consider.
Okay. What about Majesco? The kind of partnership they have struck with IBM. The stock has already moved up, but some of the research reports that our research analyst has been talking about, they see further upside up to 650 odd levels. Mr. Chokalingam, do you advise buying into Majesco at current levels?
No, I just looked at the fundamentals. In June quarter, it has made losses, and it is already trading. If you look at the revenue and compare with the enterprise value, the EV to annual sales is about 1.5 times. There are many high-quality IT companies like Polaris, Emphasis, many more companies which are making a lot of profits and sitting on a lot of cash. they are also trading at around 1.5 times enterprise value to annual sales. So for mid-sized companies, I look at this parameter because the consolidation has been happening in this space. So when I see that also, I find Majesco being overpriced. So unless it corrects significantly, I would not buy this stock.
Ruchit, I think this stock will definitely react to the news. And if you look at the momentum, this has been on a tear actually. What would be the key levels to really watch out for? And would you suggest a trailing stop loss, assuming this stock will actually open higher from yesterday's close actually?
So technically, if we see, then since mid of July, the stock has started forming a high top, high bottom structure, and that too with good volumes. So this is definitely a short-term positive for the stock. Even in yesterday's trading session, we saw that the up move was supported by very good volumes. In case if the stock opens higher and continues the trend, then I believe that this could continue up to the level, up to higher levels around 536, where the next set of resistance is there. Any existing position now should be held on with a strict stop loss below 475.
HCL Infosystem is another stock. The company is going to consider a rights issue on 14th of this month, that is day after. Ruchit, have you looked at this chart and any call on HCL Info? The stock is quoting at, it closed at 48.75 yesterday.
So amongst the mid-cap space, this has been one of the underperformers. Recently, the stock has also been in the news, due to which this stock has attracted good volumes. But if we see right from the month of January, in last 7-8 months, we have seen many of the mid-cap stocks as well as the mid-cap index has given very good returns. And if we compare with the mid-cap index or the other mid-cap stocks, this has definitely not given any significant returns on the higher side. So it has been one of the underperformers. One should not jump into the stock just because of any news flows. In spite of the positive news flows, the prices have not managed to cross its highs of 61, 62,
we are getting some early
resistances.
ticks, so let's move back to Nifty, which is down 13-14 points right now, but Sensex on the other hand is up 123 points. So we'll have to wait and see how this stock really does. We should look at the pharma stocks. First up, Sun Pharma and Lupin, two stocks which are in news, and see how they have actually reacted so far. Sun Pharma, well, we have a quote that is 10% higher than yesterday's close. This is just a quote because we are into pre-open right now. Lupin on the other hand has opened almost flat, so no major reaction there. L&T would be another significant stock. Well, Majesco, you have 2.3% up. That's not much actually for Majesco. L&T has opened flat after they announced a sale of EVAC Alloys facility. And also in news today is NCC, another mid-cap stock to really watch out for, 3% up after the order. Well, let's also have a look at Peninsula Land. The company has launched the next phase of Peninsula Height, so that is stock to watch out for. Majesco, we should go back again and see how it is reacting actually. Also in news, there is Tata Steel, and you'll have India Bulls Ventures and India Bulls Real Estate. Two more stocks to watch out for. Tata Steel is up 2.5%. India Bulls Ventures is opening flat, up just 0.5%, so mildly positive. But let's come back to Nifty. It's not really recovering, still down by 30 points. Interestingly, when Sensex is actually up 100 points, so that is an interesting divergence. We'll have to wait and see how it really pans out later. So we'll wait for a pre-open trade to really stabilize, and then we'll probably have an idea as to which way the market is moving. Just a look at some of the metal stocks, because Vedanta ADR was down yesterday, and in fact Vedanta and Hindalco and other metal stocks were quoting weak and closed weak in yesterday's trade. So today the open is more or less flat to positive. Some relief there. Rupee should come on your screen, because yesterday we saw in global markets dollar kind of correcting. That would have a positive impact on rupee as usual. Up 14 paise, 65.14 is the level that we see now. Can we move back to 65? That would be interesting to watch. 65 to 65.50, 60 is the kind of range we have maintained for a while. And Somit Sarkar is now standing by with the big brokerage calls of the day. Somit, what are the stocks you're watching?
So on brokerages, first we have a Citi on NBCC India. Now they have maintained their buy rating but have hiked the target price to 270 from 232. Now this hike is on the back because the brokerage is expecting more large orders to come in the next few months, and also the pickup in execution is expected to pace up in the next few months. Now they're expecting revenue recognition to start from the third quarter of financial year 2018 on of the existing orders. Also NBCC has reduced the construction time for projects to 15 to 24 months from existing coming 30 months, which is a positive for the company. Also, NBCC is the top pick for Citi in the India industrial space. Second, we have with Phillip Capital on Intellect Design Arena. Now, they have initiated coverage on the stock with a buy rating and a target price of 170, which suggests a potential upside of 33%. Now, Intellect Design is focused on digital transformation products for banking, insurance, and other financial services. And the demand for the and in financial year 2017, they won around 63 deals for these products, which suggests a strong demand for their products. And in the past, the company has invested around close to $200 million to upgrade their product offering. And on the back of this, the brokerage is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 12% over FY17 to 19. The dollar revenues they are saying would come in at $155 and $172 million for financial year 2018 and financial year 2019. Also, they are expecting the margins to be at 7.5% and 8% in FY18 and FY19. Now, the company is also expected to turn around profitable in for the full financial year 2018 for the first time.
Well, thanks, Somit, for these details. Actually, Intellect Design Arena has opened firm. This buy rating actually gives us an upside of roughly 30% plus. Stock is quoting at 132 and the target here is actually 170. Mr. Chokalingam, do you have a call on Intellect Design? Do you like this?
I don't have formal coverage, but yes, the stock has been beaten down more than 50% and of late started improving the margin. So therefore, definitely there can be some opportunity in this stock at current level.
Ruchit, technically, how does it look?
Technically, overall, this stock too has shown some bit of underperformance in last 6-7 months. And if we see the positional charts in the 135 to 140 range is a very strong resistance. So I think one should wait and watch. Only if it goes above 140, 142, then only one should look to enter in this name.
Okay, so you'll wait for a decisive breakout here. NBCC, the other stock we talked about, Citi maintains buy and hikes price target from 232 to 270. Stock has opened marginally positive, up roughly 2 rupees or so. Chandan, do you track this stock? Any views?
We don't have coverage on the counter, but trend is quite positive and it is continuously making higher tops, higher bottom formation. So I think momentum could continue. It has support near to 215 on immediate basis and hold about 222 might take it to 235 kind of levels.
Mr. Chokalingam, NBCC, how does valuation really look? This has been an outperformer, but what's your call at current levels?
Yeah, operationally it has been outperforming and a strong balance sheet, no doubt. But valuation is slightly stretched. So I won't be comfortable to enter at this level. But if it corrects at least for 5%, then one can think of entering this counter.
Mr. Chokalingam, today all eyes will be on TCS. Results will of course come after today's market closing, so we'll be reacting only tomorrow. Second quarter is usually historically a strong quarter for the company, and also our poll is suggesting good numbers. What is your call? Will you really buy TCS or still wait?
I would rather buy Infosys because I have been saying that large IT companies, they have two problems. One is a large base effect. Now the IT export is about $110 billion, which is very difficult to grow in double digit. On top of it, you have a lot of restrictive practices from the US for India's IT export. So therefore, I believe that the wealth creation opportunity is gone long ago from these large IT companies. If at all there is a growth, it is going to be poor single digit growth in dollar term, which would apply to TCS as well. And going by the relative valuation, I prefer Infosys to TCS, and also the buyback opportunity, which is going to happen in the short term, also a tactically good opportunity for the investors. And I believe Infosys can outperform TCS. So therefore, I would prefer Infosys.
Ruchit, I have seen that market often kind of discounts these numbers in advance because TCS, Infosys, these are very widely traded and widely owned stocks, so to say. What do you really think charts are telling you? Is there further upside? Is there a trade technically before the results, or some significant levels really to watch out for?
So Pradeep, in fact, we have done some study about how this stock has reacted in last three post the quarterly results in the last 3 times. What has happened in last 3 occasions after the results, the stock has not reacted much on the result day, but after the results for 2 to 3 weeks time frame, the stock has shown a significant up move. But this time, what is different from last 3 times is that the pre-results, this stock has usually shown a lot of volatility. But this time, pre-results, since last 3 months, the stock has consolidated in a broad range of 2600 to 2400. Now, on the weekly charts too, a rising trendline support is coming around 2400. So, till the stock is about 2400, the broader trend for the stock still continues to remain positive. And if the stock manages to give a breakout about 26 after the results, then that would again lead to the resumption of the uptrend. So, what we are advising as of now to continue holding the existing long portions. 2400 is a very strong support for the stock, so one should keep a strict stop loss below 2400 for the existing longs in TCS.
Okay, so that is a call so far as TCS is concerned, but also IndusInd Bank that will announce numbers today. IndusInd Bank also kind of tends to move strong swings, before the result, and thereafter we have to wait and watch. What is your call, Ruchit, on this one? Do you think market is positive? Is there a significant build-up in positions, up move with good volume, or no?
Yes, the broader trend, at least for last 1 year, has been positive for this stock, and even within the banking space, this stock has shown a tremendous outperformance. What we are witnessing now in the momentum readings now has cooled off a bit rather than what were the previously they were showing an higher top, higher bottom structure. So in near term now we could see a consolidation phase, which could be a time-wise correction in the stock. So maybe next, in spite of the results, even if it gives a positive reaction, then on the higher side 1780 to 1800 is likely to act as a resistance. And for next one and a half month at least, we should see a time correction in the range of 1650 to 1800 in this stock.
Okay, so that's the call on IndusInd Bank. We are just minutes away from market opening, and we tell you all that you need to know to stay ahead and trade today. Nifty kickstarts earnings season with IndusInd Bank and TCS reporting Q2 numbers today. Bajaj Corp, Cyient, RIIL are some of the other earnings in today's trade. Sun Pharma gets an EIR for Dadra facility from the US FDA. Brokerages cheer this move and believe Halol could be next. NBCC gives a 1950 crore rupees order to NCC, that is the stock to watch out for construction of a multi-story commercial space. Citi raises NBCC price target as well from 232 to 270. So that's a trigger for NBCC as well. Phillip Capital initiates coverage on Intellect Design Arena, projecting a 33% upside, while another IT company, Majesco, will be in focus due to the IBM deal. India Bulls Real Estate to buy out 45% residual stake of IPIT and delist the company, which is listed in Singapore. Finolex Industries, Shriram Transport, Royal Orchid Hotel and Kalpataru Power are scheduled to meet investors today, so we'll be watching out for these stocks as well. Royal Orchid is the one that has opened up 1.5% in today's trade. Kalpataru is more or less flat, so no significant moves that we really see there. Markets have settled now after pre-open, and Nifty is all set to open above 10,000 level after losing that mark in yesterday's trade. Nifty Bank, interestingly, is also likely to open up with a gain of 40-45 points, so that's positive. Pharma will continue to lead. That is the sector which is looking strong, but also there are a number of PSUs which are doing well today, well, from different sectors, so to say. GAIL is likely to open higher, and also you have some less popular stocks like MMTC, STC. These stocks have been buzzing for a while, last 2 sessions or so. MMTC is up 6.5% today, and also there are some other stocks in news in focus today. Reliance Power is up 4.5%. TV18 Broadcast, after the results that came out yesterday, is up 4.5%. Kaveri Seed, Monsanto. So this is a segment which is higher, roughly around 4%. Sun Pharma Advance is also moving up along with Sun Pharma, gaining roughly 3% in today's trade. Intellect Design has opened higher as well. Well, Kaveri Seeds and Monsanto. Mr. Chokalingam, are you tracking this segment? Any call?
Yeah, but one can look at Monsanto, because Kaveri Seed of late has been lacking consistency in its performance. Between these two, I would prefer rather MNC name.
Okay, so that's the call really. Sun Pharma Advance is up 3% in today's trade, as you mentioned. RCF is another stock up 2.5%. Sudarshan Chemical, so chemical and fertilizer also remains in focus. Avenue Supermart is now at 1234. That's a new all-time high for Avenue Supermart, and the stock continues to move up despite some of the local brokerages giving a short call, but there is no impact whatsoever. Suzlon is also likely to open up. IOB is another laggard, which is looking strong today, up 1.5%. Delhi Buildcon, Sundaram Fasteners, Ipca Lab. These are some more stocks to watch out for. Well, Mr. Chokalingam, any call on Avenue Supermart?
Very difficult to give call because fundamentally it's a sell, but stock doesn't listen to the fundamentals. It keep moving up. Perhaps the floating stock is not there in the market at all. But I would advise caution. I mean, it's a very risky to buy at this level.
Okay, Bombay Dyeing is a stock which has opened weak on lower circuit today. Lakshmi Vilas Bank, Karur Vysya Bank, GVK Power are some more stocks which have opened weak in today's trade. Bank of India, SKF, Crompton Greaves Consumer. These are some more stocks which are looking weak in today's trade. So net, now we are all set for an open. And if you look at Nifty today, Nifty is all set to open above 10,000, so that's a relief. For around 9 or 10 sessions, Nifty continued to quote below 10,000, and now finally that's a positive sign on Nifty. But more importantly, it's the Nifty Bank which we should be watching out for, because that is where most of the sell-off and long unwinding happened in yesterday's trade. So we'll be closely tracking that one sector, and also commodity stocks like Vedanta, Hindalco, because commodity market has been a bit volatile and these stocks were really under pressure for a while now. So 10,014, that is the level where we have seen Nifty settling in today's trade. And if you look at Sensex, 31,916, so slightly below 32,000 mark. And Nifty Bank, 24,135, so not bad. So far, positive opening for all the indices, significantly 10,000 plus on Nifty that you see. We'll have to see how it really fares on the higher levels. Let's look at Sun Pharma and Lupin. Pharma sector is in focus. In fact, Pharma index is the key gainer in today's trade. So far was up 1.5% in pre-open. Sun Pharma is finally opening higher, 3.5%. We'll also have a look at Lupin, how that one is doing, and then we look at the entire Nifty heat map and see which sectors are really supporting markets today. 10,020 on Nifty, so it's holding strong. 80% of the Nifty components are actually positive. Sun Pharma, Lupin, and also you have L&T, we talked about it, GAIL, Tata Steel, Bajaj Auto, Vedanta. So across sectors we are getting support. On the financial side, that is the weak point really. ICICI Bank, you have Axis Bank, Kotak Mahindra, and also iBulls Housing. So banking actually remains weak. You see SBI and HDFC, they are barely in positive. SBI up just 0.1%, and HDFC is almost flat. It could slip into red any moment. So banking stock is are not really supporting the market, and that could be a reason for worry in today's trade if you look at it. Let's also look at some of the mid-cap stocks which have been buzzing, and let's see how these stocks are actually doing. What is the reaction to the various developments we have seen? Majesco is up 2.5% as per expectation. This one is really trading strong after IBM deal. And also look at some more stock. Indiabulls Real Estate is a stock to watch out for on that delisting news of subsidiary. So that stock is also doing well. And we also have some more stock which have been doing well is Indiabulls Venture. Indiabulls Venture is in news because they have developed an app for lending. That is interesting, that you can actually lend on mobile. So that is an interesting development. We also have NCC and NBCC in news today on the order win and a re-rating that the stock has seen. So these are some more stocks really to watch out for. So significant moves today in mid-cap and small-cap space. This space has in fact been leading, except for yesterday, when in second half there was a strong correction. Mid-cap and small-cap also fell, and towards the end of the day we had a negative market breadth. Now if mid-cap and small-cap again recover, that would be a strong sign in today's trade. Ruchit, how do you really see the mid-cap index and the overall mid-cap space moving? Because there was some sort of panic. Do you really see a confidence? Are you building position, or rather, are you looking for positional trades in mid-cap space?
Now one has to definitely go very stock specific, because if we see the broader markets, then the trended move in the markets which we saw from 7,700 to 10,200 is behind us. Now we are into a broad consolidation phase, and usually in a consolidation phase where we are not in a trended move, there would be very stock specific momentum rather than the entire mid-cap basket moving in a particular direction. So one needs to be very selective. Post yesterday's move, I believe that at least for next few trading sessions, one should be cautious. We should see some sort of more profit booking or declines coming in some of the mid-cap names.
Okay, so that's your call so far as the mid-cap space is concerned, and we'll be watching closely how mid-cap stocks will be doing today. Lakshmi Vilas Bank is a stock, and also South Indian Bank. These are some of the smaller banks today which have been volatile. Lakshmi Vilas Bank, after the result, is down around 4% in today's trade, and also Karur Vysya Bank. Ruchit, if you have had an opportunity to look at these two and South Indian Bank, any calls?
Lakshmi Vilas Bank already has been forming a low top, low bottom structure, and since last 4-5 months we have seen the stock has not given any kind of positive returns. So I think this underperformance would continue. Even in the positional charts, we are not seeing any kind of major support before 110, 115 zone. So I think some more pain is left in the stock, and about 112, 115 could be there, could be coming in this name. Comparatively, within the banking names, Karur Vysya Bank seems quite interesting because it has been one of the outperformers. And recently we have seen whenever there is a corrective move in the stock, it is more of a time correction wherein the prices stay sideways for a period of time rather than the stock giving a price correction. So this is somewhat positive. 120 is a very strong support base for the stock. And I believe the stock, the trend should continue higher up to 145 and 150 levels. So at current levels or even on minor dips if we get, then Karur Vysya Bank would be a preferred pick within the mid-cap banking space.
Okay, thanks Ruchit. Chandan, before we let you go, any interesting move that you have spotted in morning trade?
I think this Kaveri seed can do well. It has given the consolidation breakout. However, it opened positive, but a small decline will be again bought with support near to 532 zone. For target was 570 level. Sun Pharma looks good, and I'm expecting this positive momentum towards 560 in the count.
Well, thanks Chandan. Thanks Mr. Chokalingam as well for joining us this morning. So Nifty is now 10,008, higher by 24 points. If you look at Sensex gaining 70 points, and Nifty Bank is also in the positive territory. So I'll say, because it's up only 15 points, rather now only 7 points. So it could slip into red any moment. This is really the sector or the index to watch out for. Well, now Mahesh Patil, co-CIO at Aditya Birla Sun Life Mutual Fund, is joining us in the studio. Mr. Patil, thanks a lot for taking time out this morning.
Good morning.
Markets are kind of struggling at key levels, 10,000 mark. Result season is starting now, has started actually, but we'll have key results coming out today. How do you really approach markets now?
Yeah, so I think markets are in a kind of a consolidation phase at this point in time. And after the sharp run up during this calendar year, it's looking for some points really to break out from the 10,000 kind of a level. And earnings growth have been still not really that great. This quarter earnings would also be kind of an okayish, except for oil and gas and metal sectors. Other sectors should be more or less be kind of a flattish kind of earnings growth. So I think unless we see earnings growth really coming back strongly, I think market would probably remain in this range. There could be minor correction, which could come in because some global factors. We are also seeing that up till now we've seen a lot of inflows coming into the equity markets from domestic investors, and the supply is also kind of matching up. We are seeing a lot of new issuances coming in. So to that extent, the liquidity driven rally what we have seen up till now is kind of getting capped in a way.
So liquidity is actually domestic liquidity, so to say, honestly, and you are you represent one of the largest AMCs in India. What is the kind of trend? Do you see redemptions picking up, or do you see the inflows slowing down?
Yeah, so the liquidity has been very strong domestic inflows, especially in the last 3 months. We have seen a good amount of inflows. In fact, there's been a step up jump in terms of the inflows, and that is something which looks to be fairly sticky. I mean, you could say 50% of that is more sticky money, which should continue for the next few years or so. And
so no signs of slowdown at all, or no pickup in redemptions?
So there are a few redemptions, okay, say from the high ticket large investors, okay, they would be taking some money at this point in time. But that is also getting balanced by a lot of new fresh money which is coming in from new investors coming in. And that money is getting into the equity funds, but also the other hybrid funds. Okay, a lot of investors who are invested in bank fixed deposits are looking at alternatives which can give them slightly higher returns.
That's interesting. I mean, this redemption could be for various reasons. Not strictly, people are taking a view on markets. There is, in general, these days a working capital constraint in the system. We know after GST implementation. So, is the redemption actually coming into equity funds per se, or is it more in debt fund, liquid fund, where the liquidity is probably just moving out?
Yeah, so as I said, redemptions are not really that big. It's one or few probably institutional investors, okay, who could be taking a view on the market and redeeming, but that's a very, very small amount, I would say. There is a lot of money which is coming in from new investors. So if you look at the number of folios, okay, that has been a record increase in the last month.
And growing.
And growing, okay. Yeah. So that new investor base is increasing, and that is adding to the more sustainable flows what we are seeing into the markets.
But as an investor or as a fund manager, how do you take advantage of such a phase, when markets are consolidating, not really correcting? So are you reducing exposure to certain sectors, adding somewhere else? What exactly are you doing?
So I think this is a time when we are seeing that the markets is not really doing much. Individual stocks probably are behaving differently. There are some of the sectors which are doing much better. Within that, a few stocks, we've seen some of the stocks having given good returns. So it becomes more of a bottom-up strategy, really. Even sectoral level, we haven't seen any big kind of a breakouts over there. On a macro basis, they seem to be fairly balanced out. But I think, yeah, there are individual stocks, okay, where there could be certain drivers. It could be the earnings growth in the near term, okay, which could be the driver. So it becomes more of a bottom-up stock pickers market at this point in time.
And in that case, which sectors or segments will you be watching closely in terms of earnings this time?
So obviously sectors where we are seeing the earnings growth outlook improving, and post GST and demonetization, there are a few sectors where we think things will start to improve. The domestic consumption side, especially the consumer discretionary sector, the consumer durables, autos, where one should see things picking up. Again, thanks to the cut in interest rates, that should boost demand. But also the shift from unorganized to organized, which is, we are seeing that trend post GST starting to pick up in a few sectors. That should drive demand for some of these companies. Apart from that, on the global front, we are seeing the global growth is now starting to pick up. And I think after the global financial crisis, for the first time, we are seeing the global outlook being such as strong, especially in US and in Europe. And as a result, some of the commodities are doing fairly well. So commodity prices are up. And then we think the commodities stocks should report very strong earnings even in this quarter. And in India, because of the deleveraging, you should see a stable earnings growth going through. So that sector looks good. Even the oil and gas sector should report very strong numbers because the refining margins have been very strong in this quarter. And even the outlook on refining margins, while they have come off from the initial peak, seems to be fairly okay looking at the demand supply at least for the next 1 year or so. So oil and gas sector should report again very strong earnings, and that looks to be doing well. So these are some of the pockets, okay, where we see decent earnings visibility. And obviously the banking sector, the private banks, NBFCs are still showing fairly good, especially the retail focused NBFCs.
So that is actually where there are concerns, because those who are performing well, like private sector banks and NBFCs, are already stretched in terms of valuation, and where you can really find some value in PSUs. There are no signs of improvement yet. So what's your strategy here? Are you reallocating? Are you reducing or adding? What are you doing?
So yeah, I mean the markets, wherever there is earnings visibility and there is good growth, we've seen the valuations expand. So that I think will continue to remain. I don't think you'll get cheap as long as we see a big opportunity in that sector more longer term, because either driven by more penetration and as the financialization of the economy happens, okay, you should see a stronger growth in some of these segments. So as long as that visibility is there for not near term but also for a longer term growth, I think the sector will continue to do well. I think valuations will remain high. We've seen that in a lot of sectors, whether it is even the consumer sector, where there has been decent earnings visibility. And as long as the companies continue to grow, the NPAs remain under control, ROEs are pretty decent, we continue to really hold on to those names. I mean, one might not increase the exposure incrementally in some of these stocks, but we don't see any reason for us to really trim exposure in this space and continue to hold on. I mean, this stock sector has had multi-baggers in that and big winners for us in our portfolios.
But most fund managers have been reducing IT stocks from the portfolio. What has been your strategy and what do you expect this quarter?
So IT has been underweight for us, and we've seen across people have reduced exposure because of the slowdown in growth in the IT sector. But at this point in time, looking at where the market is and looking at the valuation in the IT sector, we think that's probably a time to start relook at the sector more as a defensive. Don't see much downside over there. There has been still, I think, we've not seen any major pickup in terms of growth outlook over there. The financial sector, the banking and financial space is still not really seeing any big increase in terms of expenditure. Having said that, I think the pressure on rupee, the rupee was appreciating, so it has paused now, and there is some kind of expectation that it could probably depreciate, not big, but at least 2-3% depreciation from here on is kind of possible on an annual basis. So that gives some kind of a margin cushion for the IT companies, and also considering the huge free cash flow generation what they generate, I think it could be a sector where one can slowly start building exposure. I mean, we can't expect very strong returns from this sector, but I think with some amount of re-rating and earnings growth, say around 10% or so, yeah, it might not be a bad sector to have in the portfolio at this point in time.
You know, of late, companies like Sun Pharma and Zydus have been able to get some clearances and approvals from US FDA. Do you think pharma is a sector really to watch out for today? Should one start investing or rather increasing exposure to this sector?
So pharma is facing a couple of headwinds which are there. So we've seen the one about US FDA issues which were there, which is now getting resolved, so which is a good thing. We saw consolidation in the US market on the distribution side, and that led to pricing pressure over there. Another thing which is happening in the pharma sector in US generic space is faster approvals coming through. So the opportunity to monetize any new product is coming down fast, and there is pricing pressure. So all these factors are impacting the earnings, and we've seen a sharp reduction in terms of earnings growth over there. But I think it's still probably 1 or 2 quarters where you could still see some pressure on pricing pressure on earnings and the core earnings. But companies which are now upgrading and getting into the specialty pharma products, I think, and having good pipeline, I think they should see better stability in terms of pricing and earnings going forward. So I think, yeah, it's a good time to start looking at these companies which have got that capabilities. And apart from the near 1 or 2 quarters kind of a pain, I think you could see earnings growth coming back over the next 1 or 2 years. So I think we are looking at companies from a stock specific perspective, and yeah, it can be a good contra bet to start building exposure in the pharma at this point in time.
Well, thanks a lot, Mr. Patil, for joining us this morning. Let's have a look at Nifty and Bank Nifty once before we slip into a break. Both the indices have kind of erased half of their losses for the day. Nifty Bank especially was down 120 odd points, is again back above 24,000. That's good. And also Nifty is struggling to cross 10,000 once again, but very close to that mark. Let's slip into a short break now. But coming up next is there a pickup in demand in the real estate sector? We'll ask Irfan Razak of Prestige Estate, and we discuss credit growth in the microfinance industry with HP Singh of Satin Credit Care.
Are we live?
Programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. Welcome back. You're watching Indian Open. Demonetization, RERA, the impact of GST. It's been a very eventful last few quarters for the real estate sector in the country. So has the festival season provided some solace? We're joined today by Irfan Razack, the Chairman and Managing Director of Prestige Estates. Mr. Razack, good morning. Thank you for joining us this morning on BloombergQuint. Let me put that question directly to you. What's the outlook right now for real estate? Are you getting over the RERA GST hump and getting into the festival sales hump or not yet?
The sales have been there continuously. Of course, we had the RERA hump, like you called it. I think that's behind us. Even the confusion of GST is also behind us. But business has been quite good. September has been pretty nice. And as we get into the festival season, I believe that people are committing and buying. The only difference is now what is being sold is the existing inventory that's available. Because the new launches again have to go through that process of getting uploaded with RERA, and those require all approvals and every single document in place. So that will take a lot more time for newer projects to come into the market. But having said that, I think there's enough inventory with all of us that we can sell, and that's helping us to liquidate what stocks we have.
Follow-up question to the September comment that you made. Can you give us any numbers to give us a sense of how much better the month was versus previous months this year? That's one part of my question. And the second is, if currently mostly you're focused on getting rid of inventory, are you seeing any pickup in pricing in any fashion because supply is a little constrained?
No, I mean, it'll be counterproductive if the pricing goes up. Of course, there is a very slight upward movement on the pricing. Having said that, now, like you talked about September numbers, because the board meeting and quarterly results are just around the corner, I can't just give you specific numbers. But we had this event called Keys, and that really helped the company to get a real big bump on the sales. And it was pretty exciting for the teams across the regions that we work in, and we're pretty excited, and customers took advantage. And I believe everybody's mood is upbeat, and things are moving well. And even now, continuing, I think things are happening, and I do believe as we go along, our endeavor will be to bring in new launches and new product into the market. To get the upswing on the revenue.
So would it be fair, Mr. Razack, to say that the quarter gone by, and I'm not asking you for numbers because I do understand earnings are around the corner, but the quarter gone by has been substantially better than the preceding quarters?
Yes, certainly.
It has. Okay. I want to ask you one more question before I toss this across to my colleague Pradeep, and that is that there have been several reports of a Canadian pension fund investing in your company. So it's a two-part story that you're looking to combine all your commercial assets under a single umbrella, and that maybe the Canadian pension fund CDPQ is looking to pick up some stake in that. Can you talk us through what the latest status on that is?
Yeah, I mean, we've done restructuring of the company as on March 31st itself.
Right.
That's we've segregated the residential with the office, with the retail and hospitality. So we've got 4 different pockets just now. This was to focus on growth and to also consolidate ourselves in these different pockets of asset classes that we are working in. And now the news of CDPQ, Canadian pension funds, and so goes on. And somehow, somebody gets some inkling that something is happening. But at the moment, like I've said it earlier, this is all market speculation. There's no deal. There's nothing that has taken place. There's no commitment that has been made. Because if I do make a commitment, I think the first people that need to know is the stock market as well as the SEBI. So right now, as of today, though we may be negotiating or maybe even discussing many things, but there's no deal with anyone, and hence there's nothing for us to get really.
Okay, it's well understood that there's no deal, as you pointed out. But can you give us any, information on what the nature of the talks or the conversation with CDPQ is at this point in time? What could be the size of their investment? How much stake are you looking to sell? And anything that you can help us understand really what you're trying to achieve through that stake sale or through that investment.
You got me wrong. We have not talked about any valuations, any sort of things. You see, certain times some offers to keep coming in, but there's nothing concrete for us to really talk about. In case there's any concrete thing that happens, I think we'll let you know first. But at the moment, there is nothing that is really, or if you ask me in terms of either numbers or stake sale or whatever else.
But you're not denying that you're in conversation with them, so I assume that you are in conversation with them. You're simply just saying at this point no contours of the deal are available to share.
No, if you want me to say categorically, there's no conversation with CDPQ at all. Right. Maybe there is conversation with many others. But then not with them. I don't know where this name came from, and
so you might be talking to other investors, but you're not talking to CDPQ. Is that correct?
Not at all. But in fact, even the talking to others is something that it's coming from the other side. Some interest is being shown. Let's see if something really happens. We'll definitely.
But so you're not actively looking to place any stake at this point in time or raise any funds through such an investment?
Honestly, not really, because you see, I'll tell you our position. See, right now we've created X amount of assets. Those assets are yielding. There's no pressure on us that we need to monetize them. In fact, I would say our endeavor will be to grow those assets, get a certain larger scale if required. So we are looking at various options. You see, the only option that we look at is how to, sort of generate more capital, and how to scale up, how to do more. So in that endeavor, there could be some conversation somewhere. But as of, that conversation just remains a conversation until it turns out to be a deal. So there's actually no deal with anyone. And the idea is that the endeavor of the company and the focus of the company is both in retail and in office, how to scale up more, how to do more, and how to create more value for the company.
As you mentioned, for new projects now, because of the GST and specifically because of RERA, the process is probably, is lengthened, and you'll have more time before you can announce new launches. Is that the reason why you said you are not really under pressure to generate liquidity, so talks can go on for a while?
No. See, one is the residential business is separate. When I said we are under no pressure, what I meant is most of these assets which are already yielding are already created, they are yielding, and we've already monetized them by way of lease rental discounting, and we don't have any pressure for payback because the rent goes to pay back the debt. And then there is a little extra surplus that comes which helps us to create more assets. But in the residential segment, the thing is that the new launches now have to have all approvals in place, then it has to have the RERA stamp. So the new launches definitely have to take a little more longer to come into the market than it would normally be, because say now being a festive season, we would be working hard to push in a couple of new launches, and now without the RERA registration number, I just cannot bring those new launches into the market. So the effort of the team will always be to see how quickly we can convert those properties that we've been working on, designing them, getting them approved, bring them to market as soon as possible. Maybe in the next quarter, there'll be a lot of launches from the company, both Bangalore, Chennai, as well as in Hyderabad.
And have you secured registration for all your ongoing projects under RERA?
Yes, we have. Yes, in fact, we've registered all our projects. And I must say it was a pretty seamless process, no human interference whatsoever, website and everything that had to be loaded on the website. And fortunately, whatever that needed to be registered as per law has been registered. And we've got the permanent number for almost all, barring a couple of projects which I think should normally come by routine.
Mr. Razak, would that mean, or are you suggesting that maybe this second quarter was tough for new launches because of all this registration stuff, and that it's more likely to see that we'll see new launches in the third quarter? Can you give us some color on that, because that doesn't impact your financial earnings?
Yes, the first and second quarter had no new launches, and now we are into the third quarter, and hopefully the third quarter, with all the efforts that we are putting and with the help from the RERA, if they give us the registration number quickly, we will definitely have a couple of new launches, and the fourth quarter certainly will have a lot more bigger new launches.
Any numbers you can put to the size of those launches, or what kind of, how they will add to your inventory in some fashion?
No, we are working on, I think if you are asking me the number of square feet or number of units that we are working on, is pretty substantial. And I would say totally we would have about 4 projects, pretty large, all in excess of 1,000 units each, 2 in Chennai, 2 in Bangalore, maybe even 3 in Bangalore, which can come from now to March of 2018, and so that's a lot of stuff that can come in. But I think even the customers also are waiting, because these are different micro markets also, and we are also pretty excited that we need to do this quickly, because that will definitely boost up the top, the operational numbers. Also, at some point of time, add to the revenues. So it's actually.
In fact, that was my next question, sir. That are you on course, despite the fact that Q1, Q2 did not result in any new launches? Are you on course of meeting your revenue guidance of 3,500 crores for the year?
Yeah. I think we had given a guidance of sales guidance of around 3,000, and I think we'll meet that. There shouldn't be any problem whatsoever.
Okay. What more detail can you give us in terms of how rental income is doing in the market, pockets of the market that are doing better than others, anything that helps us understand not just how your business is doing, but also the underlying realities of the economy at this point in time, consumer demand, pricing power?
See, now I just saw an announcement a couple of days ago. Bangalore has leased more than 10 million square feet absorption. Now, where has this business come from? Initially, it used to be ITES. Now it is coming from the online retail sector. Now that is growing in a big way. The Amazons and the other Flipkarts of the world are also absorbing a lot of space. So Bangalore has again clocked more than 10 million square feet during only just 2 quarters, and I think that's a good sign. And the rentals also have hardened, and the supply in terms of vacancy levels is very, very minimal. And good locations, especially the outer ring road and even CBD, the rents have hardened, and it's doing well. So all in all, I think the rental market is pretty bullish. It's also coming. Some of the demand is also coming from co-working companies like WeWorks and CoWorks and other things. So there's some demand keeps coming from some sector or the other.
Isn't that only peculiar to Bangalore, sir? Would you say you could extrapolate it to other regions under your geographies?
Yeah, I think even Hyderabad has done very well for itself. Although at the moment, we are not present in Hyderabad. Chennai, whatever we've built is fully occupied, and we are now endeavoring to do 3 or 4 more developments in Chennai. And Hyderabad, we've just tied up a project which will take us at least 2 years to complete, and we'll have to see what the market is at that time. Because it's always this, you see, you tie up a development, and by the time you get approvals and get ready and come to the market can be different. But currently, the market is quite good, and we as a company, between the retail and as well as the office, we have an rental income of about 700 plus crores annual exit rentals, and this I think with the work that we are doing just now with the projects on hand, it can go up to 1200, 1250 crores.
Okay, Mr. Razak, what's the update on the hospitality business?
Yes, the good news is both our Conrad in Bangalore and the Sheraton Grand in Whitefield, both are almost ready. We've got the occupancy certificates for both these projects, and this the last mile completion, the simulation is going on, and we hope to open these hospitality assets to the public in the next 8 to 12 weeks. So that will be another big one. And of course, there'll be a third hospitality asset which is under construction, which will take a little more time, is the JW Marriott in our Prestige Golfshire campus. Right now, currently, whatever we are operating, like the Aloft and the two Oak Courts, one in the CBD, one in Whitefield, and the resort, all of them are doing well. The occupancy levels are good, and we are pretty happy about how the hospitality assets are performing.
Mr. Razak, one last question, if I may ask. So far this year, how have the realizations moved in some of your key markets?
Realizations in the sense?
In the sense,
the
property prices, the rates, especially in residential segment that you are quoting and you are able to get.
Yes. Now, see, that's a very valid and good question. If you ask me, this major business is coming from the mid-income housing or maybe even affordable housing, and the rate per square foot realizations have been around the 6,500 rupees per square foot average, because we do have a little upper segment also, luxury segment also. But all in all, it is the where you have a lot of movement and where you have a lot of demand is in the mid segment. But having said that, even luxury has picked up, and there have been quite a good demand in the luxury segment also.
What is your exposure to affordable housing at all, sir?
It's not exposure, but we are definitely creating more assets in the affordable housing segment as defined by the Government of India recently in their policy.
So any specific number you can give us, like how much how much of your future development will be in that?
We have 3 developments which we have already designed, which are under approval, come under that definition of affordable housing. And once the approvals happen and once they get registered under RERA, those will be launched. I believe going forward, I believe that even this segment has a great future, and we will be focusing a lot more on that, and hopefully there will be a lot more that we'll be doing there.
All right, you sound very buoyant this morning. Mr. Razak, thank you very much for joining us and sharing those details. We'll come back to you when earnings are out to find out more on some of the granularity of those numbers. There you have it, Prestige Estates, sounding like finally the third quarter will bring some pickup for the real estate industry. Let's move on to our next company now, which is Satin Credit Care.
Yeah, and Satin Credit Care has just raised another 150 crore rupees via qualified institutional placement, that is QIP as we know it. This month, it's fourth in about 1 year. The Microfinance Lenders Chairperson, MD HP Singh, joins us now from Delhi to talk about what the company plans to do with the money that they have raised. Mr. Singh, I'll put that question to you. What's your answer?
So we've raised this money for our growth, and technically for us, our capital adequacy, which was even at about 21%. So this has moved on after this QIP to about 26% north. And this money has been taken over for us to clock more growth, and we've given a guidance for our March 18 numbers for 5,500 crores loan book. And we feel that this money is going to be utilized to leverage that and raise more debt.
But this is your fourth QIP in last 1 year or so. This is a bit unusual. What's the reason, if any?
No, it's not been unusual as such. So our QIP happened before demonetization in October last. And after demonetization, there were some provisions which had to be done. But we got Asian Development Bank as our investor in April. And I think getting a marquee brand as Asian Development Bank to be one of your investors, I think, you probably have to do an equity raise at that point of time. After that, the promoters did put in some money. And then we had a very small issue, preferential issue with Capital First. And Capital First was mainly a strategic and a business tie-up, and not in the terms of a capital raise, where we are going to look at products from Capital First. And that is what we are going to actually leverage upon and do it through our infrastructure and our branches across over there. So this has been the reason. And this time, what the QIP has been done is basically to leverage ourselves to move forward and have a growth in our loan book, which reaches about 5,500 crores by March 18.
So what's your assessment of capital requirement for next 12 months? Has that been taken care of with this fourth tranche?
Yes, with this capital adequacy, I think we are fairly good to go to reach this number of 5,500. And if you look forward towards our next 1 year as such, I think we do not need capital now technically for our growth from here on. And this would probably be our one of our last capital raise in the next 1 year or so.
Sir, can you give us a sense of what, asset quality is looking like right now? And at the end of the last quarter, you did raise some concerns about the lingering effects of demonetization. Are we fully over that now? What is the loan book growth looking like? What has asset quality been like in terms of collections as well?
So our collection efficiencies, if I put it across in comparison to what we had after November. So November, December, January is the months when we were clocking in about a 50 to 60% collection efficiency. And to have weaned away from there and now come to a collection efficiency for the last 5 months of 100% plus, I think the effect of demonetization are clearly over. But we still do have some lingering effects left right now because the overdue which were there for the last 8 to 10 months are now coming in, but they will come in slowly. But the final effect is that, since we have moved away to 100% plus collection efficiency, the past overdues are also getting recovered. So asset quality is improving. And in terms of our growth, as I said, after demonetization, I say there was a lull in the growth for some period of time. But the disbursements for the last 6 months have again picked up to come up to a level which was pre-demonetization as such. If I talk you through and give you an example, I think we are doing right now per quarter about a disbursement of about 1,200 crores or so, which is better than what we were doing during the pre-demonetization days. So in terms of our loan growth, I think it's
sorry to interrupt you, but
now,
what's the comparable number? If you're doing 1,200 crores right now, what was the number, let's say, before demonetization?
So before demonetization, we were doing about 800 crores plus over there. So it was in the range of 800 or 900. Now it's closer in the range of about 1100 to 1200. So that's what the difference which is there.
So it isn't just a recovery from demonetization. You're in fact seeing growth in the market at this point in time. Is that a fair assessment to make?
Yes, absolutely. That is what it is. That is what it is.
You said that there was some recovery of the money that was not paid during the demon and the post-demon period. What is the amount of that? Can you give us what the second quarter has been like in terms of asset quality numbers?
I can't give you the real figures as such, but what I can probably give you in general is that, the second quarter is going to be fairly much better than what our first quarter was. And I think, that is what I can probably tell you. And in terms of our asset quality, as I said, we are doing 100% plus collection efficiency, which means whatever has been the overdues since the demonetization time are getting recovered now. But the process is going to remain slow. We've done provisioning to a large extent, which takes care of whatever provisioning we had to make. So that's been done to a large extent. So for us now, the quarter actually hinges on the growth, the the revenue stream coming in, and definitely some kind of the reason where we will probably be able to give you a much better quarter than what our previous quarter has been.
Okay, so your gross AUM stood at 4220 crore. What is the target for end of the year? What kind of growth do you foresee?
5,500. I said 5,500. So that's where we're going to reach in terms of our AUM.
And also, do you have any target for your NPA number? Like you said, it will not probably deteriorate further. But what kind of improvement? Any targets there?
See, what I can probably tell you is in terms of our provisioning, what we've done up till June quarter, I think we've done major chunk of our provisioning. So it is not going to be a deterioration in terms even of our provisioning from there moving on. So our NPA levels are not going to deteriorate now, whatever in terms of provisioning what we've done. In fact, it is, I hopefully think, with the way I think the collection efficiencies are moving in, I think we probably might have a better ratio of probably maybe some write-backs coming in the next couple of quarters, also is what we are trying to really look at.
So one final question from my end. I'm just looking for a little bit more detail on the growth aspect that you touched upon, 800 crores versus 1200 crores. Can you give us a sense of, is any of this prompted by farm loan waivers? Does that have an impact on your business in any dramatic fashion? Are you seeing this in certain pockets, in certain geographies, or is it across all the geographies that you operate in? And can you anticipate an acceleration in that growth in the months to come? Is that the mood in the market right now?
I think the farm loan waivers and the loan waivers which were talked about was practically a fallback of the demonetization times when I think there was a lot of rumor going on in terms of demonetization. But the mere fact is that I think the borrowers and the environment where we operate in, they do understand that these loan waivers are not technically related to microfinance institutions, and these loan waivers are typically where they have taken farm loans, and specifically farm loans from banks and all, So I think, for us, that probably sets at rest whatever the environment probably had to throw in that in terms of our loan waivers. So, once that is set at rest by announcing loan waivers, I think we are always good to go. In fact, our collection efficiencies increase from there. So having said that, I think, more with good monsoon, technically being there, with farm incomes coming in to a large extent, that is the where the rural push is always made, and that is the reason we are seeing now spikes in demand in terms of our credit growth. Another factor I think which I would like to put across is that I think after demonetization there has probably been fragmentation, and there has been probably no disbursement or low disbursement which has happened for the last 8 to 10 months, So once that lull is over, there has always been a pent-up demand which has not been taken care of in the last 8 to 10 months. And that will again give us further growth now in the next 2 quarters as such.
All right, so we appreciate you joining us this morning. I know you'll be able to share more detail with us once your numbers are out. So thank you very much for all the color that you provided in terms of what the microcredit business is looking like this morning. Now, with that, we're going to wrap it up here on Indian Open. But coming up next is the F&O show, and we've got an important company joining us right on the other side as well with some latest updates. So stay tuned.